All right, well, it's Thursday, October 30th. One more day left in the month. Halloween tomorrow. And may go live, may not. Tomorrow, do a little bonus trade day. We'll see how the markets go after tonight's earnings. We got some pretty good earnings tonight. Let me go ahead and just share that um, with you. And let's take a quick look at what earnings are on tap for tomorrow. Okay. So here we go, and taking a look. It's Thursday. I mean, I should say after the bell tonight. So we've got Amazon, we've got Apple, we've got Coin, and then we've got Strategy tonight. And then you can throw in some small ones like Cloudflare, Reddit, Coinbase as well for the day. But the big one is Amazon and Apple tonight. Amazon, I think, being the big one tonight. We'll see how things go with Amazon. We know how things will probably go with Strategy. But Amazon need to see something, and things again look pretty decent from the earnings. Everybody's beating. The question is, I think on this monstrous run up that we've had, not only do you have to beat, you have to smoke the earnings. Okay, you can't just have a beat. You can't have a 5% or a 3% or a 1%, or you can't have a beat on the bottom and the top line. You absolutely must crush it with the markets rallying as hard and as fast as they are. And then you've got to have fantastic guidance. And if you don't, things are going to be a little tougher for you. And everyone's looking at what is the CapEx spending going forward? Are they going to be plowing money into CapEx? Well, we know Amazon's going to be doing that. We also want to see, do we expect the earnings growth to continue? Everyone's worried that the AI boom is starting to flatten out again, or flatten out a bit, not again. So we'll see what happens with these stocks. Doesn't affect us a whole lot on the trading end of things. It affects our long-term holdings a bit. And the fact that I own Meta, that's not so great today. And our UNH trade, UNH has been down a couple days. We'll take a look at that. But otherwise, we're still up nicely on UNH, and Meta's down a fraction now, but or a bit, but not terrible. All right, so let's get started. Let's jump into it and take a look at the markets and see where we are. All right, so earnings, we got that under control. We know what's going on. I will get off the video with you, and you should be able to see my screen. Let's just jump into it. Now, we'll go back to the weekly, daily uh, trades. Here's your ES. ELX looks pretty doggone good, right? You know, 8 above the 21, stocks above the 21, bullish PSARs on both the daily and the weekly. And with the little selling yesterday and a little selling today. Now, today we went up, touched new highs again today, right? So you're only a couple hours removed from new all-time highs in ES that we hit again this morning. So no one should be too upset with what's going on in the markets. And like I said, I'm not upset at all. My trading account is up nicely today. Why? Because we're at doggone all-time highs from just a few hours ago that we hit it. So things look pretty good overall. Markets are down about 18 bucks on the session. And what would I be doing at ES right now? Probably not a whole lot of anything. We're still very close to overbought levels on the weekly. We might be rolling over a little bit, but one bar doesn't make a trend today. And if we do, I think that would be great. Let's see what happens. I think Amazon is going to have a lot to do with things tonight. So we'll keep watching what's going on in the markets. But I would expect Amazon to still beat, although who knows what's going to happen with Amazon. And I do like Amazon as a longer term hold. We'll take a look at that in a minute. But things are really hinged on Apple and Amazon, and we've got to hear really great things coming out. But overall, on the day, things are fine. A pullback would be needed. If you want to pop in a 112 here, I think, or Jade Lizard, I think that would be acceptable. It's definitely still not strangle territory. And I would like a little more selling To be honest with you, I'd like to come down closer to maybe the 21 EMA, at least on the daily chart. We're nowhere near that stuff on the weekly chart. But things are pretty good overall. Bullish market. That means you shouldn't be too afraid to be adding trades at these levels. But I think you got to pick what makes the most sense from a trade standpoint, because not every trade's a good setup. Okay? Market's bullish, but find those trades that are good setups and not overbought. All right, oil. Oil continues to look pretty decently. I loved the move on Tuesday. We talked about this coming all the way back down. I mentioned on Tuesday that oil was a naked put, a 112, and a Jade Lizard candidate. I have not changed my tune at all on that, but I'm going to add Strangle to the mix. So I think oil is absolutely a Strangle here, or a 112, or a Jade Lizard if you are taking a look at that. So I think lots of trades on oil look really, really, really nice. I've got a Strangle that is at 48.5%. I'm most likely going to just take that off today. Yes, it didn't hit 50, but I just want to get a new one on, and I don't want to be overstretched in oil. So we will most likely close that Strangle today, and we'll put a new Strangle on because I can't squeeze much more out of this thing. I mean, 1.5%. Okay, so 1.5% on a what, $1,980 trade is $30. So I'm not for $30, I'm not waiting. I'd rather go make another $1,000. So I will close that trade today, even though it's a fraction early, because I just want to get a new one on. And I think the setup here is really, really, really good. And I also do like a 112 setup in oil. All right. That being said, let's move on to gold and take a look at what's happening in gold. Gold's had a nice couple of days trying to find a bottom here. We talked a bit about anchored VWAPs uh, and stuff on gold. I'm going to take this one off. Let's put on one from down here. All right. So this anchored VWAP down here makes a lot of sense. Seems to be where we're trying to find some support in here on gold. I think gold, I mean, technically on the daily, it sets up for a strangle here. And I think between the 50 and the 21, it's not bad. On the weekly, it's not a great strangle trade. I think gold can get itself moving higher again. Um, I'm definitely in the 112 or Jade Lizard camp here. Strangle's a possibility. I mean, I don't know that it's going to rocket up, but a strangle in gold isn't also it's on the table as well. So I think you could take a look at that. And if we have currently a BA111 trade in gold, which is now up 73%. We just let that thing ride. Then we also have a 112 in gold, which is up 46% now in just 8 days, which is awesome. So it's a fantastic couple trades in gold. Got to be loving it. So I really can't put a 112 on because I have essentially two of them. I don't want to overdo trading in gold, but a strangle would not be the worst thing. But I'd probably have to take something off in order to put something on. For me personally, if you have nothing in gold or oil, then I think you could just add trades in here. Those are my couple takes on that. And then bonds. This is awesome to see this pullback on bonds here. We've had a nice couple days. Why? Well, let's take a quick look at what the 10-year is doing. I mean, we've been heading down. I mentioned it last week. I mentioned it again on Tuesday that I think 10-year and 30-year rates are getting to bottoms. And then with the Fed, again, they're not tied to the Fed necessarily. All right, so 30-year, 10-year, they're not really tied to the Fed funds rate so much. But the Fed did put in a little doubt that there could be a potential pause in December, but they're still going to cut in December or January. So whether they wait till January or they cut in December, does it really matter? I don't think it does. Fed's they're in a cutting cycle. But I mentioned that I thought rates were about as low as they were going to get for a while, which means I think bonds are going to start to drop a little bit more here, which is going to be really great for us. So I like that. And I don't think bonds are cratering, and I don't think rates are going to rise significantly. I think it's just giving us a great setup. So Bonds, which was a no-touch trade on Tuesday, okay, because of where we were. Look at 2 days, we had this nice pullback in bonds, and now you've got great setups. Okay. So this is why patience and discipline to me makes the most sense. Just, there's no reason to just keep slapping trades on. Okay. We have enough trades. We're up today. Market's down, we're up, which is great. Why? Because I'm patient and disciplined, and you need to be as well. Don't force trades that aren't there. I said on Tuesday, bonds were a no-go on any trade setups, and I meant it. And now today, we've had two nice down days. It came back to us, and now bonds, I think, are a great strangle trade. Um, and I think you could also potentially be looking at naked puts in here. I'm personally going to go the strangle trade because why take one side when I could have two and double my income? So I'm going to definitely be putting on a strangle here today. I don't have enough strangles working. I have the one in oil that I was going to take off today, put a new one on. I would really like to get more strangles running. Gold, I have two trades. It's a little iffy that I would put a strangle on here, but it's a possibility in gold. Gold has an IVR of 58 right now. That's pretty strangle worthy. All right. So kind of a reference to Seinfeld. If you guys have no idea what I'm talking about, then that's fine. But I think it's strangle worthy. I think oil with an IVR of 25.5, again, that it doesn't really factor into my trading because I don't really care what IV does, but it's elevated, which should give us a better chance of being successful, or a better chance of getting out quicker, I should say, not being successful. Doesn't change the probabilities, but I like it here. So gold, strangleworthy, bonds, strangleworthy, oil, strangleworthy. I'd like to have one of all three on right now. So I think that we'll take a look at those today. If there's stuff you guys want to take a look at, let me know. There were some questions in the Discord that I frankly cannot remember because I did have to. Yeah, exactly. Uh, no soup for you. Uh, but yeah, no strangles. Now there are strangles. And we can put on. Now, there were some questions. Somebody asked a question in the Discord earlier. I gotta admit that I had to reboot and I do not remember. I might have been in. I just want to make sure I get to it. I said, we'll talk about that. Um, I said I would talk about it today. I have no idea where it is. All right. Well, if I figure it out, that'll be fine. Sorry, I'm just taking a quick zip through here. We will definitely talk about Meta in a minute. All right. So anything else that you guys want to look at? Silver, we haven't looked at that in a while. Silver, pretty strangle-worthy here. So I think silver's not in a bad spot. Right at the 21 EMA on the daily. The weekly's a little bit overdone, but I think that's fine. Uh, I think it's here. Now, we could certainly get a rocket, and I think you got to watch what happens between Trump and Xi today. If things go like south badly, silver could then rocket up again. But I think silver is not a bad opportunity here, and I think copper is not a bad strangle opportunity here. I'm not in either one of them. I'm probably not adding either one of them here, but I don't think it's a bad thing for you if that fits your trade plan. All right, let's get into Amazon. So Amazon reports after the bell tonight, which me saying this out loud means I do have a covered call that's on in the because I do have a permanent covered call set up. So I do have a covered call that I have to remove today, which is nice because Amazon's down today, which gives us a nice opportunity to exit that a bit heading into earnings. So I'll be closing my Amazon covered call today, but we're well off of our lows. We bounced pretty close to the 100 and the 50 and are off the lows on the session today. I just like Amazon. Let's see what happens tonight. And but I've already added more trades to it. I'm up several $1,000s uh, in Amazon. So I'm pretty happy with what's going on. All right, let's get into this. And I don't necessarily need to close that thing, but I'll just close it now, just to while I'm thinking about it. I'll at least put in an order to close Amazon, the covered call. Would I enter it here? Well, nothing with, I wouldn't do a single thing with earnings, so I think it's just ignore that. If you're in a poor man's covered call, Dolly, thank you. If you're in a poor man's covered call, okay, we do not want to hold the covered calls into earnings, the short calls. If you're in an income poor man covered call, then you can either A, not hold any covered calls into earnings, or B, you can go at the expected move and write the in the money covered call at the lower end at the expected move. Had you done that on Meta yesterday, if you were running Meta as an income poor man covered call, you would have had a really, really nice return in one day on that covered call. Charles, with earnings tonight on Amazon, would you do anything to protect the downside? I would not. Remember, and why would I not do that is because A, it's a long-term holding for me, so I really don't care about Meta or Amazon or anybody else selling off today. But I also have a synthetic stock position, which means I do have protective puts that could also help in that. Now, on my Meta trade today, I mean, Meta's down, but I'm only down, a portion of that because I have a protective put on Meta. Now we're nowhere near it because Meta had run up nicely since I bought it, but I have the protective put already. So if you own either like the 80 Delta Leap or you have the synthetic with the protective put, I don't do anything to protect my downside because it's a long-term hold. And Meta for me is not a poor man covered call. It's strictly a leap trade for me. I'm in it for the long term, so I don't care. I'm not trading it. Uh, but no sense. I don't protect the downside on anything that's in exactly, Charles. But yeah, I don't protect the downside of anything in my income portfolio because I'm long-term trades on those, and those that I have a synthetic stock with a protective put, it's already protected. Or if I just had a leap, I'm already protected because I can only lose so much on the leap as well. Whether it's a poor man's covered call or a leap strategy in the investing account, I'm not protecting the downside, right? Because it's a long term and I just wanted to accumulate growth over time, which brings us, if I just had the synthetic stock, would I add a put? If I didn't have one, I would absolutely consider it. Yes. Okay. Um, but it all depends on the trade. I would consider it. Um, but again, if it's a long-term hold or a poor man covered call, and so let's go into poor man covered call versus income poor man covered call slightly here, even though I'm just showing the charts. Poor man covered call, the or a leaps trade. And for me, I have in the lazy trader, which is my investing accounts, and which is also pretty much mirrors most of my IRAs uh, as well. The way that those are apportioned here is 40% are in income ETFs, 40% are in poor man covered calls, and the remaining 20% are usually in leaps, either bought leaps or naked puts sold leaps for the most part, or I'm selling naked puts to get into a leaps position, right? So because of that, I'm in it for the long term. All these things are long term. I'm not really worried about protecting the downside as long as I'm in stocks that I like. And I like Amazon long term. I like Meta long term. I like UNH right now long term. Will I carry that for 10 years? Probably not. Okay. But I do like UNH for the next year or so, yes. I like PayPal right now for the long term. Okay. I obviously like QQQ I like SPY, and I like SoFi, all for the long term. And I like Tesla um, for the long term still. And our Tesla trade is up, 20, I'm up $20,000 on the leap right now. Okay. And it's a poor man's covered call. It's not protected to the downside, and it wasn't protected to the downside because, again, I'm not worried about the downside protection in the investing account. Right. Hope that makes sense, Charles. Hopefully that answers your question uh, a bit. So poor man covered call versus income poor man covered call. Well, the goal of a poor man's covered call, oops, oh, that was the Amazon covered call coming off. Okay. The poor man's covered call, that's essentially buying a leap and selling out of the money calls against it. And I'm selling decently out of the money, like 20 delta, 15, 25 delta, something along those lines. Okay. That's what I'm doing. Okay. Per my trade plan. Okay. I'm doing exactly what I say. I'm not really doing anything that I didn't already post in my trade plan here. I do modify these periodically, but I'm still in on my trade plan. But for a poor man's covered call, I'm just in it for the long haul. I'm in it for the appreciation of the leaps. Really, that's all. If I'm selling short calls, that's fine, but I'm selling as long as this thing's in a bullish trend, I'm selling 15 to 20 delta because I don't really care about the income. It's an investing account, and all I really want is the appreciation of the leaps. Why leaps? Because they give me leverage over owning the stock. Now, on a day like today in Meta, owning leaps, not so great. On a day when Meta's climbing or when Meta's climbing over time, leaps are fantastic. So they work both ways when you're leveraged. Okay. But the poor man covered call, your goal is capital appreciation of the leaps. Period. Done. End of story. Okay. If you get any money from the calls, great. Okay. But that's not the goal. Okay. It can help you reduce your cost basis, which is all nice and dandy and fine, but that's it. The income poor man covered call, the goal here is strictly extrinsic value cash flow on a week to week basis. Okay. So there's the big difference is one is only focused on generating extrinsic cash flow on a weekly basis, and one is based upon generating long-term capital appreciation of the underlying. That's the big difference. I hope that makes sense to you guys. So why would you put one on versus well, when you look at a poor man's covered call or a leap trade for me, okay, I'm looking at decent earnings and revenue growth on these things, and I don't need more than like 4%, 10%, something like that, earnings and revenue growth on leaps. Okay, I just want consistent 10% earnings and revenue growth. Okay, and I'd like a return on equity of 15%. Good, good fundamentals, right? For an income poor man covered call, those are underlyings that I expect to be a little more volatile, which means I'm looking for 20% earnings and revenue growth and 15% return on equity, and I like them to have an exciting product. So the big difference between these is, and let's pop it up on this screen here. I know I could have done it a different way, but I want to use it this way. Okay. I want to take a look at, when I'm screening for income poor man covered calls, again, it's 20% earnings, 20% revenue, 15% return on equity, and then I would like my RSI, okay, to be just a little bit over that 30. I want it to be generating some income. But look at these companies: NVIDIA, Broadcom, Palantir, Shopify, AppLovin, Robinhood, Coinbase, and Vertiv. Those are the only ones that qualify for me. Okay, and I only am looking at my own watch list on the right-hand side here. Okay, which I don't watch everything. Okay, I only watch stocks and the one that's under these top stocks right here, Amazon, Nvidia, most of your Mag 7s and a few others. Like, those are the keys. These are the key ones. I really just want to be in these And then some of these other ones here, which is only a few, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1 to 2 to 3 to 4 to 5. Okay. So only 25 other stocks outside of this realm of 2, 4, 6, 8, 10, 12. Okay. So 24 plus 12, 36 total stocks in my world. That's it. If it in this list, I'm probably not trading. And even some of the ones in this list, I probably won't trade. I'm just tracking them. Okay. So this is it for me. Okay? I'm not trading. I'm not going to put on an income format covered call if it does not find this list. The exceptions for me would be QQQ and SPY because I want those as just steady growers, okay, or steady uptrends over time. Okay. Don't get the volatility I do of these, but you want a little bit of juice, right? A little bit of volatility, a little bit of something, something. And every one of these companies has something that makes it really unique. NVIDIA, we know about them and their chips. And again, they don't make chips, they only design chips. Okay. But they design really great chips that are really strong in the AI sector. Okay. Yes, there's some competition out there from others, but not really. I mean, these guys are they're the king. All right. Then Broadcom. Well, Broadcom makes some of these chips, right? Palantir, they really lead AI software and technology. Okay. They're pretty moated. Not that there aren't other companies out there, but they're the big gun in that. Okay. Shopify. Okay. Fantastic shopping network. Doesn't mean there's not competition for this one. So this one you can take or leave a little bit. AppLovin, they're the absolute leader in apps. Out there. Robinhood, I think they're the absolute best brokerage for the masses. They're not a good brokerage, in my opinion, for traders, but but they are for people that are, wheeling and doing some of those things. And they have lots of other great services that they're adding on. Okay. Coinbase, we know what they do. And from a Bitcoin and a crypto standpoint, they're one of the leaders out there for crypto wallets and so forth. And then Vertiv Holdings as a fantastic company out there in the electronic space. So these are kind of moated a little bit, big time companies with monstrous growth. Okay. But when you look at leaps, okay, and I don't know why this one's down here at 4. I think I was trying to find something else. Okay. When I look at leaps, my revenue and earnings growth is only 10%. Okay. So it's not quite as high. It's not quite as volatile at companies when I'm looking to buy leaps in something. Uber, okay, United Health, Meta, okay, Coinbase. Now, some of these can qualify for both lists, okay, and some of these do not. All right. I also am looking for an RSI under 60 to make this list. So if it's got a high RSI, it's not making this list. But these companies in here, these are real possibilities for me to get into from a leap standpoint. Okay. Slower growers, but still 10% earnings and 10% revenue. It's not terrible. That's not bad. But Amazon, is a very mature company. Okay. So it's a very mature company. They're only growing at 10%. Okay. But that's fine with me. Right. I don't think it's a great income forming covered call play for me because it's not maybe as volatile, but that might be my number one most favorite stock in the world. Okay. And then you look at a couple other ones, like Microsoft and Netflix. They're very mature companies. Okay, they're not as juicy and as dangerous as some of these other ones. So yeah, Netflix. Robinhood makes both lists. You can see this one is just a ridiculous growth rate. For Robinhood, AppLovin. So it does make both lists, but this list is a little more calm. And if you take it off of my watch list, okay, well, now you have lots of other stocks that you guys can choose from. And if I was picking, I would look at the lowest RSI ones. So who's a good deal here? All right. Well, right now, Meta, looks like a really good Meta looks like the best buy after today's drop. Okay, it's down 11% today. It's not down 50%. It's down 11. Okay, so Meta's down today. Netflix, this is the next best RSI one. These are now this with Meta with an RSI, and we didn't get to any of these stocks yet. But Meta's RSI, it's under 30 now. You don't get that very often. Okay, and when's the last time you saw Meta under the 200 day? Not counting the moves potentially in. Let's just go with this one. Not counting the move earlier this year, but if we take a look, wait, slow loading stuff today. Could be my internet. Okay, let's just go back. And yes, earlier this year, that was an opportunity. Okay, we all recognize that. But then let's go back. I'm trying to find when Meta was below its 200-day moving average. You've got to go to 2022, where the market was in a bear market all year until January of 23. Okay. That was the last time, okay, Meta was below the 200-day moving average, and then obviously here. It's only happened twice in the last 3 years, okay, until today. I'm not saying mortgage your house, sell your children. I'm not saying do any of that stuff. But if you like the company and you think long term they have a good product and a good opportunity growth rate, okay, the 3-day rule is in effect for me. Okay, so the 3-day gap down rule is in effect. I will wait, let this thing shake out for 3 days. I'm already in it, so there's nothing I have to do. I don't have to add it anyway. But I'll wait 3 days. This is kind of like the UNH trade. Let's just let it shake out for a day or two. You got Amazon tonight. What if Amazon is terrible? This may not help Meta at all tomorrow. Let's just see. 3-day rule in effect on Meta. So would I buy today? Some of you did, and it may not be bad. And you might have a little more pain, but still, I think long term might not be a bad spot. Take a look at this pivot level over here. That's exactly where we are today, by the way. Coincidence? Don't know, but there aren't a lot of coincidences. But 3-day rules in effect for me. All right. So, and then when I'm looking at a leap trade, if you look at my trade setup, I would like to see the price pull back to the 50 or the 100, 200-day moving average. Okay, check. I would like to see RSI between 30 and 50, oversold or in a neutral zone. Check. Okay, bullish reversal off the lows or the MAs. Not a check yet. We haven't seen a bullish reversal yet, so I'm probably holding. Bollinger Bands, look to buy when the stock's price is at or near the lower Bollinger Band. Well, it smoked the Bollinger Band, right, by a bit. Bollinger Band's at about 680, and we're at 660 and change. Check. Okay. And then MACD crossing above the signal line. Well, we don't have that yet. Okay, so we're not there, of course, on this thing yet, but it meets almost all the criteria to jump in right now. I still might wait a day or two, but if you're in, okay, just be prepared. You're gonna have some, a couple volatile days coming up. All right, so I hope that makes sense and answers a lot of the questions on, if not in Meta, would a position be recommended? What is the difference between an income poor man covered call and a poor man covered call, and why? I think I answered a lot of those all in this example here. So I think just taking a look at things, I screen for them. Now, you might like Blackstone, you might like Vistra, you might like Adobe. Okay, a lot of people like Adobe. I don't. Okay, but it doesn't mean you can't. Adobe certainly, if you're looking at this weekly chart, does this look great to you? I don't know, but it's oversold. Well, it was oversold here, then oversold here, and then oversold here. Okay, and is it ready to bounce? Maybe. I don't know. But what does Adobe do that can't be replaced by AI or other competitors? Okay, it's not Adobe, PDFs, right? Because you got PandaDoc and 9,000 other companies that do PDFs. Okay, that's not their product. It's really the Photoshop suite. Okay. I don't know if there's any of you that are on here that are marketing people. My daughters are both marketing. I do a lot of marketing stuff for businesses and I help them. And yeah, I used to be a good Photoshop guy, and my daughters are well trained in Photoshop and they're very good at what they do. However, I would say that 90% of what I do and my one daughter does is in Canva, okay, which is a private company anyway. So high-end Photoshop, Adobe Suite, got some great tools, okay? But for the masses, get a Canva account and you can create just about anything you want to today, which makes me really sketchy about Adobe. Sorry, I'm probably digressing. Doesn't mean don't get into it, but that's why it doesn't meet my watch list is because I don't really care about Adobe. I don't care about Carvana. I'm not into MasterCard, which these are all potentially decent deals here. Um, I'm really not a Microsoft fan. I'm not an Amgen guy. I'm not a ServiceNow guy. ServiceNow, okay, great earnings, I believe, yesterday. I wasn't really paying attention, um, but ServiceNow looks really, really good. Okay. And I wouldn't blame anybody here if you're looking at this weekly chart for thinking that this might be a great time to get into ServiceNow. I just don't like the company, even though they're doing great. So, why? Because uh, my son and his new wife, they work for the Federal Reserve, and they use ServiceNow, and they hate it. And pretty much everybody that works at the Federal Reserve banks hates it. So why, you know, I don't want to get into something that most people don't seem to like using, but they're using it. The company's doing great. Okay. I just don't like it personally. So there it is. All right, let's keep moving on. I'm sorry. I'm digressing unless you're finding this helpful and interesting. Okay. But that's the reason. If I don't like their product, okay, then it's not on my watch list. If I don't think they're unique enough, they're not on my watch list. Okay. You got to build your own watch list, but don't just go to FinViz or something and just throw in screens and throw trades on. Okay. It's too much of that, in my opinion, out there. Too many people trading stocks that I don't think you should be trading, in my opinion. Okay. But what do I count as? All right. So Tesla here, nice pullback to the 21 today. Why? No reason. Okay. There's no reason for Tesla to be pulling back except, well, everybody else is doing it. So I guess we'll do it today. Okay. Nice pullback here. Look at how much this thing has run. If you look, huge moves up, gaps to be filled. Okay. So let's wait and see. Okay. But we got gaps. Right. Maybe we'll come down and fill that gap. That's when I'll add some more Tesla. I do like Tesla a lot. I think they're very unique. I don't think the EV is the key. I think it's the robotics, the energy storage, and all the other stuff that they do. AI, I think that makes them special. All right, Meta we discussed already down here. I don't know that I'm in it. It's a 3-day rule for me. Let's see. And then once it stabilizes, then you've got a gap to fill. Okay. But I don't think this gap's getting filled tomorrow. Right. So you've got some time. You don't need to rush in. Don't be first to the firing line. Okay. Let other people take the first bullets and then you can get in on it. But if you bought it like down here overnight at 650, or if you bought it at 660 or something, 655, good. You got a great deal. Right now, I think just chill. Okay. So Meta and chill. Apple earnings tonight. We're not in it. I don't love Apple. I use their products. They're good. It's just not the grower that I like. Google, crazy move. great earnings, fantastic company, but I've been saying it's just too far gone. This was your opportunity in this bull flag. So that was your opportunity. If you got in here, great. If you're not, it's too far gone. Microsoft, if you like it, might be an opportunity. I don't think they do enough unique things, in my opinion, to warrant me getting in it long term. Palantir, it's just so crazily overbought. It's just stupid. Okay, but it just continues to move higher. It broke out of this range. We talked about this range for a couple weeks. Okay. Once it broke this range, it was Katie bar the door, and that's what you get. Okay. Is you get this thing taking off. It's a no-go now until it chills out. Hood finally starting to get some two-sided action. It came back down here, touched the 50, and then ran. If you got in, that was the time. Here, not yet. I wouldn't be doing anything yet. This is just me. Okay. Netflix, okay. It gapped down, 3-day rule. After 3 days, it's kind of holding that third day low for the most part. But the one thing for me on leaps, and if you look at the leaps trade, for me, what does my leaps plan say? It does say look for the MACD to cross the signal line, or look for us to start to get that bounce for both poor man covered calls and leaps. Both, I would like to see reversing or bouncing off of support, and we're not doing that yet on Netflix. So there's no reason for me. Stochastic momentum is still heading lower. RSI's low, but not low enough, still heading lower. MACD is starting to reverse. That's an interesting sign. Here. I think you can wait another couple days or another week or so. I don't think you got to jump into Netflix here for it to get back up to the ranges and start to fill that big gigantic gap here. Might do it though. All right. Broadcom. Okay, it's pulling back today, but that's only because it was at all-time highs yesterday and it was going bonkers, right? It's got a gap to fill down here. Nothing bad about this. Look how far it is above the 8. I mean, you just want this thing to come back down so you can get into it again. Now, we did a trade on this thing, and now we're weakening a bit more out there. We did a trade on Broadcom, and we're actually up nicely today because this is an income poor man covered call. And the income poor man covered call is, let's just keep selling at the money because 8's above the 21. I'm selling at the money. Yes, it might need to get rolled soon. We're not quite at 90%. No, I have not rolled a short call on it because there's still extrinsic left. There's still $227 out of the 1,650 left. How much is that? Well, 216 out of what did I say? 1,650 is 13. Okay, so we're at like 86%. Okay, so I could roll today on this move. We're in the money, but I'm not as much worried about assignment since I have plenty of extrinsic left in this thing. Let's just see what happens on it. I own the 347, which is right around here. Okay, and then it ran hard on us, which was great. We made money, even though we were losing on the covered call. But I'm going to still get $1,600 of extrinsic out of this trade, which is why I don't care about buying it back for a loss because I get the extrinsic. Okay, so we're going to make great extrinsic, and also the leaps on Broadcom, they're up 50% in 7 days. I'm up $4,500 on those. Right, so we're up 16% on this trade in 7 days. We have a loss in the calls, but who cares? Because we're going to get our extrinsic out of it. So I have not closed the short calls on AVGO. All right. I know I've stuck on charts all day and haven't really put any trades on, and I just don't know that I want to do any trades today necessarily. I'm pretty full, and markets are doing what they do. Uh, SoFi, okay, this thing just keeps chugging along. Okay, pulled back the last 2 days, even though it had great earnings. Phew, perfect. Okay, well, we sold covered calls on it. Right. So our covered calls are now up 81% on a poor man's covered call. I still have 8 days to go. I did roll them, okay, or I put them back on for 2 weeks out. So it's okay. I took them off for earnings and I put them back on a week out. So we're fine. Nothing to do on SoFi. Uber up today nicely. This is one of our lazy trader uh, trades. So this one's up. I'm okay with where we are on Uber. All right. That's pretty much it to cover. If you want, we can jump into just have a few minutes left. But if you want to put a trade on, we can look at some trade setups. If Meta holds at this level, should we buy an 80 Delta Leap or can we go 70 Delta? You can do whatever one you like. I mean, my trade plan says you can go anywhere between I think what 75 and 85 or something like that. If you like a 70 Delta, fine. I think when you get a chance to do things at this meta rate, this is where I go longer. Okay. I don't really change my delta or what I'm doing, but I do go out further because when you get a deal like Meta today, then I go out more than a year. I can go out a year and a half or 2 years. Okay. If I'm buying at something that's not really discounted well, maybe it's only at the 21, it pulled back to the 21, and I want to get in or the 50, then I might only go a year. But when I get really good deals, then all I do, I don't change what I do, I just go out further. But that is in the plan. Uh, NNE, we also got into this thing. So we are in NNE as well. It's kind of flat today, but we're up 20% almost in one day. So we got into this thing perfectly at the morning yesterday. I like NNE. As a long bull down, nearing the bottoms again. This thing just cannot get moving. I'm in it. I've got some money in it. I've added uh, naked puts at 11, which maybe I'll get assigned tomorrow on. And then, but I'm actually up on those. And then I also bought calls, which are down slightly today after 3 days. But the naked put I have is actually still positive, even though it's in the money. I might just close that for a win today. Let's take a quick look at that. All right, let's jump into, and then UNH has had a pretty awful couple days after earnings. I think it's just giving you more opportunities there, but it did fill its gap on earnings. So it filled the gap. Gap is done. Okay, so now it gets a little bit of a break. It chills out, and then we'll see how it recovers. Okay, and then Bitcoin not doing too well. Bitcoin's just struggling in here lately. Looked like money was rotating back into it, and then it's had a couple bad days. Strategy reports tonight. It's breaking the support. It does not look good at all. So strategy would probably be something that I would not advise jumping into. What will I do on it? I will show you what I'm going to do on this thing, but I do not like the way strategy is behaving. I got out of my Misty covered call ETFs as well. I have no trades on in strategy except for the income format covered call, which is still doing fine. Sorry, let's go take a quick look at that. And we got a few minutes to do some trades. All right. Quickly here, what I want to do, and I'm going to try to post these things into the Tom's trade ideas. All right. So if you guys are ever looking, that's where most of the trades that we talk about end up, or when I see trade ideas, I put them in the Tom's trade ideas under Tom's resources. All right. So trade ideas today. First one was on CL. We talked about a strangle. If I was doing a strangle, I'd go out around 90. There isn't a 90, but there is a 76 or a 110. I'd probably do those 76. I'll do probably my normal 7 delta, 6 delta-ish. Something like this. So this would be the potential strangle that I would be looking at for oil. So here's the strangle on oil that I will be looking at adding today. Okay, so we'll take this one. Okay, I'm going to pop it into CL strangle. Boom. All right, that's in there. I like this one a lot. I would size it appropriately for me. And I believe I got to double check my sizing just so I can get it right. I think usually around 2,000 bucks. So I'm willing to do because a 2x loss or 1.5x loss would put me closer to like a 1.5, 2%. Right? So 1920, 2560, something in this line. Actually, we're going to put it on. Okay, so I will put that trade on. So there's the strangle in there. If you were doing a 112 type of trade, you would be more at 60 days. Would either be the 47 or the 76. You don't really have a good 60-day. If I was looking at the 47 DTE, I'd probably put something on closer to this setup. I don't know how this is going to look. All right. So if we take a quick look at this one, we make 320 bucks in the tail using 45.65 in margin. That's a 7% return. Perfect. If we drop down here, okay, we make significantly more than that. We could actually probably tighten this up a little bit more. All right. Oh, we just got filled on our CL strangle. So we better get rid of the one we got. All right. So I like this here a little bit better. I don't need so much money in the trap, and I get a lot more money here. So I'm making 430 bucks on this as a 50-cent wide versus a $1 wide on 47.86. That'd be a 9% return. I really like this trade a lot. Okay, so this would be a 112 on CL. Okay, so those are good. And I wanted to take off the existing strangle that I have that's at 49%. It's almost closed. Okay, but I want to get out of it because I've just put a new strangle on, although it's right at the 33. So I'm going to let this thing ride today. It may close on its own. If it doesn't, I'll work it down because I just don't want to have two strangles working. Jade Lizard's doing great, fantastic stuff on that. And then GC, I also talked about a strangle in here. Okay, at 90 days, we got an 89. This is going to be really skewed to craziness. Take a look at the 7 delta. Wow. 6 delta. There is not a 6, but we'll go down to 4,900 or up to 4,900 on gold. Give me 2 seconds here to take a quick peek. I know we're over time and I got to run. I got another meeting, but yeah. Let's go. Let's use the 5,000 just as a check, and let's see how this strangle looks. Okay. We might have to narrow it down. Let me look at the skew on this thing. Craziness. It's skewed to the upside because everyone thinks gold's still going higher. I'll keep it at 4,900 for now. This is not a bad look. Here, I'm going to take in 2690 on 8,200. So 2690 on 8260 is a 32% return. That's a lot. Okay. So gold with its IV up, it's actually a little bigger than I want. So I'm going to stretch this thing just a tad. Okay. Barely even get it on this screen for you. Even so, this is set up a little bit better. It's a little wider than I was doing a second ago, but I'm still getting 2190 using 76.28. Okay, this is 28%. This thing is awesome. Okay, so we're going to save this. Boom. Boom. I went a little wider only to knock down uh, the total credit received so that it's not exceeding a 2x loss, or a 1.5x loss doesn't exceed what I want it to be. And I'm still making a ridiculously good amount. I like it. Okay, I'm going to place the order. We'll see what happens. We'll still keep an eye on this strangle up here coming off today. All right, so there it is on gold. Here's our AVGO trade. 168 bucks is all that's left. So this has changed a bit. It's almost close to that 90. If you wanted to roll today, I would not fault you for rolling on AVGO. We would roll. We're going to roll out in time. Okay, we're going to have to roll up, and we're going to go to the expected move. Okay, we'll just stay right there. Now, if you want to go half the distance to avoid a bit of a whipsaw or something, you can. I'm okay doing this and spending the cash on it. So 370 on AVGO. You know what? I don't really. Let's be a little bit more conservative. So we were at 360. We were at 347. Okay. So instead of rolling all the way up, I will only roll partial of the way to 360 or so. Yeah, we'll just do that. So to avoid any whipsaw of this thing rallying, I think it still can drop more. I'm still getting unbelievably great extrinsic at 360. I could even do this at 355 and roll it up and still have really great extrinsic. In fact, 355, let's just go this way. It's half the distance. Okay, I'm going to roll half the distance up on AVGO, see if we get filled on that. Might have to fuss with it a tad. All right, bull. Okay, our naked put here is up nicely. We're in the money. I'm probably just going to close this thing and take the money on bull. Oh, and there it is. Great deal. Good win on bull. No sense taking assignment because I already bought the calls for it, which are down today, but it's fine. I don't need to own twice as many. So we'll take the win on bull and we'll keep moving. GLD, nothing to do there. IBIT, 1 day left. It's only got 50 bucks. So we could definitely roll that one to next week. And we're going to roll down to at the money. Technically with IBIT, this thing is negative. So you really want to be in the money more on it. So we can roll down and let's go in the money. The ATR on IBIT. I know I'm overtime, guys. Sorry. Is $2. So we're at 61, so 59. So let's go to instead of going to the full expected move, let's just go here. We're going to pull in a nice credit. We're going to give ourselves some really nice downside protection here on it. And instead of, again, we're rolling from 64 down, maybe to avoid some whipsaw, we won't go all the way, but we're still going to go in the money on it. Okay, so there's IBIT. JP Morgan, nothing to do there. That thing's fantastic. It's up 40% now in 3 days. Loving it. Yeah, IBIT always takes 30 seconds. The Lulu trade, it's down a little bit, but it's okay for now. All right, strategy. This will be the last thing we'll touch base on today. Yeah, I did move it to, did I not move it to 3,500 on gold? On the upside, I'm sorry, the downside. I'm not too worried about that. If I don't get filled on this thing, then yeah, I can move it to 3,500. Maybe that'll help me get it filled. Um, we'll see. It's a good point. All right, strategy. All right, we've still got a decent amount, but of extrinsic, but we've already made $4,000 on this thing, so I'm totally fine with that. Happy as a clam. So what we're going to do is we are going to roll down for next week, but I'm going to roll this thing all the way to the expected move. Right? So we're going to go roll to the expected move. We have earnings, so we'll roll down to the 245. The ATR is 14, so 14 from 266 would be 252. All right, so I'm actually going, so instead of the 3 ATR here, I'm going to the expected move because of earnings. Uh, so we'll protect ourselves. We're still going to generate $4 of extrinsic on a 260 some dollar stock. Okay, that's 2% of extrinsic and giving ourselves 20 points of downside protection at the expected move. I'm doing it. Bingo. So we booked $4,000 in profit and we have given ourselves a $1,500 worth of extrinsic along with $20 of downside protection. Okay. If this thing drops 20 bucks, okay, we're going to realize $7,000 on this trade. Okay. Uh, I think it's beautiful. So I love the way these things work. NNE, we're up on. PayPal, these puts are down a bit. Nothing to worry about there. QQQ, this can probably also get rolled. It's in the money. We'll look at these tonight. SPY is not able to be rolled. It's got tons of extrinsic left. So nothing to do there. All right, we've made some adjustments in here. Yeah, maybe we'll take a look at this gold trade since it hasn't filled yet. We'll make the slight adjustment. We'll see. We'll see what happens on it. If we get filled or not, gold's finicky. It makes you really work hard for it. So we'll see if gold can get filled. All right. All right. ZB Strangler, you guys are killing me. I got to get going. But let's do it. ZB. All right. Let's trade it. Okay. We go out 90 days. We're going to go 7 delta. We're going to go 6 delta. Okay. There she blows. So that should be the trade on ZB for the Strangle. All right, we're going to take in 359 bucks on 1600. If I'm doing this, okay, I'm probably closer to this size. So I would 221.56 using about 10,087. It's about 21%. It's a great trade for me. So let's book this thing. This is what I will be looking at. And again, we're looking at 109 on the downside. So 109 on the downside. And if you look at the charts, okay, we're up at 117. Okay. 109, it would have to break its trend line. It would have to break the 50. It would have to break the Bollinger Bands. It would have to break the 100, the 200. It would have to break the most recent lows. And I just don't see 109. 128 on the upside. That would be where, if we start to bounce, maybe that's where you get tested. I like it. I think it's a good setup on it. So we'll put the trade in. I might have to adjust it a fraction. I'm trying to get 23. It only wants to give me 22. If I walked it down, I'd still be getting a really good deal on this thing. But I'm going to leave it for a few minutes and let's see what happens. All right. I think that covers everything, guys. And that strategy trade, by the way, when I look at the whole strategy trade and what I just booked on this thing, right now we're at 11,580. So it has definitely dropped. I mean, strategy is sucking wind. Okay. This thing sucks. right? But it's dropped. So I'm down $7,000 here. But when I look at the trade I just rolled on strategy, okay, what did we do? We bought it for $2.03 today. Hang tight. I know I'm over. All right, so we booked $4,000 today on this thing, and then we sold a boatload. We're actually up on this trade. Why? Okay, here's the trade. So we bought it for 1890. It's at 11,580 a few minutes ago. Okay, so it's at 11,580. So we're down that 7,300 like I talked about. But in just two trades, in 10 days, we've booked 7,743 bucks worth of calls on it, which has given us a $363 net income. Yes, we're only up 2%, but we're up 2% in 10 days. The stock is down 10%, okay, since we opened it. So the stock is down 10% in 10 days, but we're up 2% through today. And if this thing doesn't drop more than 20% or more than 20 points tomorrow, if it drops 20 points tomorrow, we're going to absolutely book a boatload of profit on this thing. So this is why I like it. We just keep selling it. We're going to keep generating cash. All right, I got to run. You guys have a great rest of your day. We'll get this thing posted up. Hope this was really helpful. Lots of stuff covered today. And we'll see you guys in Discord. All right, take care.